I'm not sure Trump is aware of this Jubilee year, but he certainly understands that the stock market is at a highly dangerous level. Interest rates are artificially low, Trump told Fox in an interview. The only reason the stock market is where it is because you get free money. That is absolutely true and unheard of to be acknowledged by a front-running presidential candidate. He then warned of very scary scenarios ahead for investors. It's an obvious enough warning. Central bankers continue to build a pyramid of debt by printing trillions in aggregate. Since 2008 and the beginning of the current slump/depression, they've printed well over $50 trillion. The money hasn't helped the economy. In fact, it has made it worse. But it sent stocks and bonds into the stratosphere. The only trouble is that this kind of artificial market inflation always ends in disaster. Trump knows that. So does William White, a top financier with the Bank for International Settlements, who warned earlier this year that debt levels were unsustainably high and that neither countries nor individuals were ever going to be able to pay back what they owed. He was quoted in a UK Telegraph article as follows: "The only question is whether we are able to look reality in the eye and face what is coming in an orderly fashion, or whether we'll be disorderly." Debt jubilees have been going on for 5,000 years, as far back as the Sumerians. The next task awaiting the global authorities is how to manage debt write-offs, and therefore a massive reordering of winners and losers in society, without setting off a political storm. I was surprised when I first read his quote, because he actually mentioned a debt jubilee. It's fairly apparent that the elites orchestrating the latest financial disasters want people to be aware of the Jubilee event that we've discussed at length. Trump didn't mention Jubilee, but he certainly sees the catastrophe being created worldwide. He's not a big fan of the Fed either, and previously indicated back in May that he would most likely replace Janet Yellen. But to be sure, he still wants the Federal Reserve to remain as the central bank of the US. If he didn't, he wouldn't have made it this far. Price-to-earnings ratios are massively inflated. Interest rates are at all-time historic lows, and actually have gone negative in some cases, as hard as that is to believe. Corporate profits are shaky to non-existent, and as a result, larger corporations are buying back stock to boost share prices. There's simply no justification for the markets to be at all-time highs. The world is in a quasi-depression, and stocks especially would reflect it if central banks were not frantically pumping money into the world's economy. Janet Yellen and the Federal Reserve know how bad it is. Why else would they keep interest rates at or near 0% for 8 years? If there were real journalists in the mainstream media, they would ask this question of old Yellen. Stock markets are at all-time highs. Why are you too scared to raise rates 0.25%? Of course, she wouldn't give a straight answer. But the straight answer is that the stock markets are at all-time highs because they've held interest rates so low, so long, and printed up trillions in currency units. If they hadn't, the stock markets would be somewhere in the neighborhood of 50 to 90% lower, and the US government would already be bankrupt. Instead, they continue to keep the game going just a little while longer. But the longer you play this game, the more destruction will come as a result. The Bank of England just cut rates by 0.25% and expanded its QE program to £60 billion, including the purchase of corporate bonds. This is a significant move since the last rate cut for the Bank of England came in 2009, and to combine the cut with quantitative easing is even more significant. It's not so much a move as a kind of controlled panic, and it collapsed the pound against the dollar when it was announced. Of course, lies surround the rate cut. Governor Mark the Con Carney justified the news by explaining the easing was the fault of Brexit. Say what? The British seek to free themselves from the corrosive authoritarianism of the European Union, and somehow Carney and others interpret this as a disaster demanding further frantic debasement? Carney emphasized he stood ready to act in exceptional circumstances and made a huge downgrade in growth forecasts, cutting growth expectations for 2017 from 2.3% to 0.8%. This is just the beginning. His easy money stance is shared around the world. Central banks are reacting in unison, pumping more and more cash into an already stuffed world economy. The Federal Reserve, for instance, was going to raise rates 3 or 4 times in 2016. It hiked a paltry 0.25% once in 2015 and stopped after markets crashed. Meanwhile, China continues to loosen, but hasn't formally cut rates since mid-2015. In Japan, the government hasn't yet dropped helicopter money as threatened. But the Bank of Japan governor is continuing to conduct reviews of ways to hit his 2% inflation target, which inevitably will involve yet more monetary easing. Lord knows why he wants the prices of everything to increase 2% each year. But that's the nice thing about central banking. You never really have to explain, or not in ways that make any logical sense. In Europe, the central bank is conducting its own form of quantitative easing. Stocks increasingly bear no resemblance to the corporations they are supposed to track. We're supposed to believe that this is judicious policy, but it is not. You see, we're being set up for one final crash, the biggest one ever. That's the fundamental reality of this Jubilee year as we've been explaining it. It's not only ushering in catastrophes, it's creating additional ones that may be triggered by October when this Jubilee year ends. But the economic disaster to come has been thoroughly prepared. Carney wants to blame it on Brexit, of course, because that makes it convenient. He wants to hide the destructive reality of central bank money printing and the global bankruptcy it has helped create. With the divergence between securities and underlying investments worse than at any time in history, it's hard to express just how bad things are going to get. Trump's not alone in seeing this. An assortment of billionaires and market observers have been warning about what is going to come. We've been updating you regularly on their predictions. Billionaire gross, Jubilee debt relief as prelude to new global economic order. Jim Rogers predicts trillion-dollar biblical crash. Famous technical analysts now predicting crash during Jubilee time period. We've also acted to take advantage of our Shemitah and Jubilee analysis to benefit our own TDV portfolio and our subscribers. In fact, our portfolio is up some 200% in the last year, and our senior investment analyst, Ed Bugos, continues to make picks that quickly climb as high as 100% or more. What you have to understand is that this sweet spot in the markets is not going to last forever. Right now, central banks are acting so irrationally that it is fairly easy to find profits if you know what you're doing. Ed Bugos has proven his expertise over and over again during the past several decades, and we're very lucky to have him guiding our investment strategies at this point in time. Right now, there are big pre-crash profits to be made, but this scenario is not going to last forever. I would strongly urge you to get on board with us before the worst takes place. And as Trump and others perceive, the worst is headed our way. It is quite possible we won't see a massive market crash if they continue to print more money. But printing even more money will not fix anything. It will again make things even worse. At times like these, it is important to understand exactly what is going on and get the best information and analysis. Ed Bugos has an insanely good track record at seeing things before they happen due to his decades of experience. Our subscribers have certainly been happy lately, including Bill, who said his mother's broker was pleased she was up 1.5% in the last year, while he was up 200%. Even the smartest won't get through the coming months and years undamaged if they are not operating from the correct understanding of what is going on. And we can provide it all to you at the Dollar Vigilante newsletter at dollarvigilante.com/subscribe.